When I was learning technical analysis, I had a lot of trouble with timeframes. I didn't know which time frame to analyze, which one to trade, and how targets and stop losses should actually be set. In this video, I will share simple structure I personally use and trust in my own trading. Before we start teaching, I would really appreciate if you subscribe to my channel. So welcome to the Investing Guideline. Before we start analyzing the price chart, I want you to know this structure. So these are the time frames that most traders use. Let's say you are looking at a monthly chart and you are expecting price to come down to some level in monthly time frame. You analyzed it and you expect bounce from that because you backtested that area before many times and you have an upside belief in that price chart. So you define this monthly supply zone and you need to set the target. Most traders get confused and do the wrong thing when defining these targets. Based on this time frame structure, you need to set your target in a weekly chart. Let me tell you again. So you define the area of your interest in monthly chart. Price came to this level and you will enter the trade and you need to set the target before you take the trade. So defining this target should be in weekly chart. You need to go down to weekly time frame and set the target based on weekly zones. But tricky part is you need to set your stop loss based on monthly chart. By doing this, you will secure your trading as much as possible. Most traders are doing this wrong. They are analyzing monthly chart and they are also setting the target based on monthly chart again. Doing this is causing them a lot of losses. Even though they know where price might bounce, they set their target in a wrong way and later on price hit their stop loss. So it's very easy. You only need to follow this structure. If you analyze monthly, you need to set your target in weekly. If you analyze weekly, you need to set your target in daily. If you analyze daily, you need to set your target in 4 hour, and you need to set your stop losses based on the time frame you are analyzing. If you are analyzing monthly chart, you need to set your stop loss in a monthly chart. If you are analyzing weekly chart, you need to set your stop loss in a weekly chart again. I assure you this will increase your win rate. And when it comes to execution of these trades, at least you need to go down to 2 level lower time frames. This means if you analyze monthly chart, you need to set your target in a weekly chart and you need to set your stop loss in a monthly chart. But trade execution should be at least in daily chart. If you wait for weekly or monthly to form some trading setup for you, you will miss that trade. Before you enter the trade, price will already take off. So that's why execution should be 2 level lower time frame. So I will repeat that again in another example. If you analyze weekly chart, you need to set your target in a daily chart. You need to set your stop loss in a weekly chart and you need to execute your trade at least in 4-hour time frame. It shouldn't be higher than 4-hour time frame, but it can be 1 level lower than 4-hour time frame, which is 1 hour. So you can execute this trade in 4-hourly or 1-hourly chart. Let me show you in a real price chart to give you more clarity. So I started analyzing this price chart with monthly time frame. First, I only read what price action was doing. I'm not looking at any indicator. I'm not drawing ridiculous trend lines or patterns. I just try to read price with my logic. So in this leg down, price was falling for months. You can rarely see green candles and they are not even strong. But after price has taken this low, it started some midterm uptrend. So each candle represents 1 month and this price has been on an uptrend for 10 months. What I see here is manipulation. So this green candle caught my attention. This July month, which is third quarterly opening, had an upside movement. And after this up movement, price has lost this level and took this previous low's liquidity. So by definition, this is bearish order block. So order block definition is that it's a change in the state of delivery. So price was delivering the upside in this green candle. And next month, this strong red candle pushed price down significantly. So it's a change in the state of delivery. But after this low is taken, price started this uptrend. And this bearish order block here became bullish breaker. It means if price comes back to this green box again, I would expect bounce from that. So this analysis happened in monthly chart. I expect bounce from this green box. So where can I set my target? I should go down to weekly. So in weekly chart, here is the origin of this last leg down. Price went up again for the last time and lost this area and dropped. So I expect price to go to my weekly target. So I want to execute this trade, but price is showing me no reversal sign. For execution, I need to go to daily chart because I define all my levels and analyze the price chart in a monthly chart. So let's go to daily chart and I need to see some reversal forming in this green box. Let's replay a little bit. So our reversal nicely formed here. So this type of reversal can occur anywhere. But why I trust this one? Because I define this green box in a monthly chart. So if there is any reaction in this green box in a daily chart, it will be strong. So now I can enter the trade. So this green box in the upper section belongs to weekly target. I was expecting if there's any reaction in monthly analysis, price will aim this weekly target, which is upper green box. So let's go back to monthly chart. I need to set my stop loss as well. Since we set our stop loss in a monthly chart, I need to define below this green box. So if you have come to this far, I will share a little hint for you. So this bullish breaker was July month, which is third quarterly opening level. If I define this opening level, you will see how price is perfectly respecting this level. And also defining target, here is the April opening, which is second quarterly opening. I believe price might come up and revisit this April opening level. But anyway, I am not targeting this level for sure because I like high probability trades. This 5% between my target and this quarterly opening level is not interesting me at all. It is likely to hit, I know, but it is against my principles. Because even though I expect bounce from this green box, price was making lower low all these 7-8 months. Let's go down to daily chart. So this is our setup. So you can set the entry here. You can target this weekly green box and your stop loss should be set to below this monthly bullish breaker. Let's play out and see. So worked perfectly. So usually people say if price is on a downtrend, you shouldn't take longs, or vice versa. If price is on an uptrend, you shouldn't take shorts. But by this time frame logic, even though price is in a downtrend, you are eliminating all these unnecessary risks by setting your target rationally. I believe this strategy will erase all the unnecessary risk. People usually set their targets and stop loss irrationally. And even if they are right, they might lose the trade by doing this. So go ahead and study this, apply this to your charts and backtest it. And if you find this useful, I would really appreciate if you share your thoughts in the comment section and like this video. I read all the comments. So see you next time.